Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Well, it's aggressive growth stocks that we're talking about once again with none other than Bill Wilton, who is our aggressive growth stock analyst at Zacks.com. And you have to lead the conversation off with PetMed Express. Pets is the ticker symbol.
Yeah.
What's the story?
They're actually America's leading pet pharmacy. You may have heard them. They operate through their website, and also 1-800-PetMeds is their number.
Right.
Call them up. They deliver both prescription and non-prescription drugs.
For your dogs and cats.
Dogs, cats.
Goldfish.
You name it. They'll take care of it.
Why are they on the aggressive growth track?
Well, as you can see, they had an excellent quarterly earnings announcement a couple weeks ago. Sales are up about 16% on both new and existing customers. Things are going very well for them. It's a 33% year-over-year growth since 2002, which is fantastic, especially in a struggling economy. Mm-hmm. This is kind of an interesting play. Most people will, say when things get bad, I'm going to get into medical stocks. But they usually neglect an area like this. As people are starting to button down, they're still going to be buying pills for their dogs, and they're going to look for the best deal, which PetMeds usually has.
Is it really medical as we know it, or is it specialty retail?
I guess you could make an argument for both, but they do have to give prescriptions for a lot of these drugs, and there is a lot of over-the-counter things that they provide. So
okay,
it could be either or.
Okay, we'll leave it up to you.
Yeah.
All right.
They also have a great history of surprising, just continuing on with their quarterly earnings announcement. As you can see, the last 4 quarters in a row, they've made an earnings announcement that surprised Wall Street analysts. Average is about 17% per report. Analysts see this, and they start upwardly revising their earnings estimates. As you can see right here, they're projecting about 15% growth for this year, a little over 12% for next year, which is fantastic. And just to go along with that, I put together a price and consensus chart here. Mm-hmm. You can see how the earnings estimates for the fiscal year correlate to the stock price. As those earnings keep rising, the stock price is going to come along with it. You can see a bit of a correction back in 2005. That happens all the time with growth stocks. Call it a PE contraction. Price just got a little bit ahead of itself. But now you can see that the earnings are well above what the price is dictating, so that's a very good sign for them. And then just their current price action chart, you can see they had some very bullish movement following that earnings announcement. They've run into a little bit of resistance here at $19, but that's not atypical. Stocks will often build up, as you can see with increased momentum, call it consolidating, before they can push through another milestone.
So nothing to worry about.
No, things are going great for them.
All right. And you also wrote recently about Compass Minerals International, CMP, the ticker symbol. Mm-hmm. You tell us they just posted historic earnings. How so?
They did. They're one of the largest rock salt and sulfate of potash producers.
I did not know that.
They're in the United States and the UK. At first you're like, wow, that sounds like a really boring industry, but rock salt, you see it everywhere. They're using it to de-ice the highways. Sulfate of potash is actually used in a lot of fertilizers. Fertilizers have been huge, so you look at the source, and that's at sulfate of potash, mm-hmm. And they are the biggest producer of that. So it's a very interesting area. They've seen their earnings increase more than fourfold over last year. That's where those historic numbers come in. 87 cents a share was fantastic, driven by a 70% increase in sales. And that was not just due to a price increase, as we've seen in a lot of commodities, but they've also had an increase in volume as well, which bodes well for those sales being able to continue into the future. Analysts have been raising their estimates. As you can see here, we're now looking at about $4.58 for this year, $7.63 for next year. Things are going very well. Analysts like the stock. They like the core business. Those estimates that I was talking about, that's more than double for 2007. So we're looking at over 100% growth rate for this year and another 80+ next year. Again, we've got the price and consensus chart here. you can see that it has had a significant contraction lately, which is very appealing. As you can see, the earnings are literally going off the chart here.
Why is that contraction a good thing?
Well, what it does is people fall in love with the story, and then they just keep riding the price up. And then people need to go back and look at the actual growth rates that this story is going to be able to sustain. So what this does is it gives you, you're buying growth rates. So this gives you those growth rates at a much better price.
Okay, it's a good clarification because normally people don't put it together that way in their mind.
And it's just like a PE ratio for a lot of different stocks. You can also look at the PEG ratio. If that PEG ratio is north of, say 1.5 times the growth rate, then you're looking at something that might be a bit overpriced. Of course, you're going to want to look at the industry, but that's why you need to see those contractions to make sure that it's going to be a good long-term, sustainable company.
Okay.
The last thing I just wanted to mention about them, they also just formed a new subsidiary. They're going to be focusing on saltwater pools. A lot of people may not have heard of those, but actually 70% of new pool installations this year have been saltwater pools.
You're talking about swimming pools?
Yes.
Oh, okay.
They're greener than most.
I thought that was an environmental thing you were throwing out.
Oh, no. These are, I guess some of it is, they're greener than chlorinated pools and other chemicals that go into there. They're easier on the eyes, skin, and things like that. So it's a very appealing market, rapidly expanding, and I think they're getting in right at the right time for something like that.
So does this company then qualify as a green company?
It's a much smaller chunk of that, and there's a lot that goes into being a green company. So I'd be hesitant to say that, but this just shows a willingness to open themselves up to those types of technologies.
Making strides in the right direction.
Absolutely.
Do you or does anyone in your household own either of these two stocks?
No, I do not.
All right. If you would like to see the text version of these two stock pieces, all you need to do is go to Zacks.com. Our homepage, go to the upper right-hand corner of that homepage where you see the Zacks Rank Buys listed by category for you, and click on the aggressive growth category. It'll take you right to all of the most recently written stories on aggressive growth stocks by Bill Wilton, our aggressive growth stock analyst at Zacks.com. And with Bill, I'm Terry Ruffalo.